Thank you very much for being a part of the Market Day Report here on this Tuesday. I'm John Jenkinson, and joining us right now is Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri. And first of all, Brian, was there anything in this National Ag Statistics report that was released yesterday afternoon that stood out to you?
You know, there wasn't anything that was real surprising. Winter wheat conditions did not improve in the South Dakota and Kansas, Oklahoma areas. Even after some rainfall, they didn't really see any improvement at all. Most of the improvement came in parts of Texas and the soft red wheat areas. So that's a surprise, I think, from the standpoint that trade was expecting it, but the market is still lower here this morning. Better chances of rain over the next several days, and nothing really otherwise than that. The Minneapolis wheat is behind normal, and corn planting behind normal. We expect that would be the case, and they will eventually catch up, especially with these forecasts that suggest better drying conditions ahead.
Well, yesterday the corn market showed some signs of resilience. Let's go to the board right now and find out where we are at today, because we started out on a higher note in this corn market. And for the most part, we are a little bit higher right now. May corn right now is steady at 378.5. New crop December corn is up a quarter at 404.5, and that is the contract high of that right now. May soybeans down 2 3/4, 10.18. November soybeans down 1 1/4 at 10.27. So yet another day of sell-off here in the bean pit.
Yeah, despite the fact we had a private export sale for the first time in 9 sessions, we're seeing a little more weakness there. The market has, I think, put in its high right after the China tariffs announcements, up in that 1050 to 1060 range on November beans. It's really hard to get much above there. I do expect we're going to see a shift in some acres out of spring wheat into soybeans going into the spring time frame here, and as we get into the June acreage report. And the market's trying to anticipate that those acreage numbers that we saw at the end of March are not going to be our final numbers. They're probably going to be a little bit larger than what we had seen. And if you combine that with some good yields this year, prices in this area above the $10 mark are overvalued.
You mentioned that private sale in the overnights. Argentina buying 130,000 metric ton of soybeans. It was interesting with this sale, Brian. Part of that was for this year delivery. The part of it was broken down for the next year delivery. In fact, 60,000 metric ton for this year, 70,000 metric ton for next year. But it certainly goes to illustrate the issues that they had this year with that soybean crop.
Absolutely, yeah. They're, importing corn from the United States for the first time in 10 years, and this is the largest sales in the last, 2 weeks, 3 weeks that they've had in 20 years. So it's a pretty major development that Argentina is buying soybeans. A lot of these beans are probably never going to get off of a ship. They're going to be diverted directly to another country, and that's likely to end up being China.
Let's go on. Yeah, let's go on over to the wheat market here, and I want to get your thoughts here because yesterday was a pretty weak day for the wheat market, and today we've got May Chicago wheat down 4 at 457.5. New crop July down 5 at 469.5. Kansas City wheat market is off 3 3/4 for the May, 479.5. July down 3 3/4, 499. And that Minneapolis wheat market down 2 for May at 586. July down 2.5 at 592.5. You mentioned that wheat earlier, and here we go with pressure again today.
Yeah, the Chicago wheat is finding the most pressure, and we've broken through technical support this morning on those improving weather forecasts. The Kansas City has held support so far. It's one that did not see improvement in crop ratings. There's more rain in the forecast, which is weighing on prices, but they've held their most recent lows around that 495, and that's kind of a key chart support area for the markets to watch. If we take that out, I think you do find some sell stops that'll pressure that market once again.
Cotton market started out with just a tiny bit of enthusiasm, but that waned in the deferred contracts with May of 24 at 83.43. But July, October, even December, the new crop down 30 at 79.05. So weakness here in the deferreds. When we come back, we'll talk to Brian about the livestock trade. We're going to get to that next, so stay tuned right here to the Market Day Report. Brian Hoops is on the line with us from Springfield, Illinois, and it's time to talk about what's going on in the livestock trade here. Brian, yesterday, cold storage report out. And as you step back and you look at these numbers from a distance, the red meat number really didn't show much. But boy, you go all the way through there and you look at the pork belly number, where we were up 21% over a month ago, 188% higher than a year ago. That was probably the one number that got the attention more than anything.
I thought so too. The beef stocks number really was not much of a surprise and did very little to affect the beef trade today. But the pork numbers that you talked about, especially those belly stocks, that's a negative demand signal. Futures are pushing lower. I would expect that they would be lower anyway, but certainly not finding any support out of that cold storage report. Now, by the end of the week, we may see an uptick in the cash market. So I don't know if these futures will continue to find a lot of pressure more than in 1 or 2 days. Yeah,
but they've been under pressure here over the last couple of sessions, and that belly market there, when you look at the daily spot cutouts, we can really see where this all was starting to precipitate.
Yeah, the cutouts have really been a key indicator as far as giving direction for this hog market. We've had some short covering in the hogs, and probably maybe more than what was expected. But the last several days, we've certainly given back a good portion of that short covering, and likely to see more weakness here until that cash markets do firm up, and usually they do when producers get real active in the fields.
And right now, May hogs are down 92 at 67.08, and kind of closing in on that low of 66.82 in that contract. June down 90 at 75.48. July down 78 at 78.12. Let's go over here to the beef side of the market. We'll start in the live cattle, and we started out the day with strength, but now April down 14 at 121.58. June fats are up 84 at 105.72. August up 50 at 105.58. The feeder cattle market, it started out with strength also, but the deferreds are now weakening. It's May feeder cattle up 48 at 141.08, but August down 2, 147.10. September down 3 at 147.65. And some of the early word was maybe $1 to $2 higher this week in the cash cattle trade.
Well, in fact, we're starting to hear some cash trade breaking loose. Kansas is reporting some 121 trade at this time. And, that may be a little bit of a disappointment that you alluded to. Instead of seeing $1 or $2 better, we're seeing mostly steady type trade. The futures here have probably gotten a little ahead of themselves. A lot of buying and short covering that started on Friday. Sometimes that short covering will last for 3 days. So today would be about the third day, and prices may start to give back some of these gains, weaken up a little bit until that market assesses more accurately what the cash direction is going to be.
Well, that cutout market yesterday for the beef was quite a bit higher. In fact, we'd also have to call that sharply higher, where we were up over $3 on the choice, almost a little over $1.50 on the selects. That's probably one of the bigger jumps we've seen in quite some time.
Yeah, and it shows that our demand is picking back up. The spread between the choice and select has been about as narrow as it's been for some time. That really suggests producers are very current with their markings, and that's really going to be key. We're 20 pounds heavier than we were a year ago, but if we can get these weights to start dropping, that'll help ease some of the supply burden that we're going to have in this May-June timeframe that we have to get through. We've got a lot of cattle coming. We've got to keep our weights down and stay current.
Brian Hoops with Midwest Market Solutions here with us. And Brian, thank you very much. Appreciate the insight to the markets. So Brian giving us just a little bit of some background. Interesting to hear, 121 now being paid for cash cattle in Kansas.
All right, good insight to have. Thanks, John.